Snipers, you have to see what's happening to the Bitcoin price today as I'm here with Joshua Earp, and we have a lot to talk about today with a new monthly open in less than 24 hours. Michael Saylor bought 480 Bitcoin today. It's a new moon. Jerome Powell spoke with the European Central Bank about GDP data. And then, not only that, for those inside of our Discord, as promised, by Joshua Earp and I, we took a long position at 19,930 at 3 a.m. with the Asian market open last night. That's already hit 2 profit targets. I'm still inside of this long position with Josh in profits. We're going to talk about why we took this position despite a potential bearish Adam and Eve pattern playing out. We'll also discuss that and a few other fun things. And let's just dive straight into the 4-dimensional revolving parts for those that aren't going to watch the whole stream. Right now, Bitcoin is playing inside of this range here, in between the previous weekly open and the 2018 previous all-time high. And what's very interesting about this is we are inside of a day trade because Josh and I promised you guys that for the first retest of 20,000 US dollars, we were going to take a long position because even if it's a dead cat bounce, at least it's a bounce. And so all we're asking for here, we're not being greedy, is for Bitcoin to get towards 21,000 where we have the weekly open. That's a very nice long position there just from our entry so far. That would be over 6% just on 10x. That's a 50% profit that we could realize in the next 24 to 48 hours. And yes, maybe Bitcoin rejects the weekly open and then we come down to fill the CME gap at 18,440. We're going to discuss all of that today. Jerome Powell came out and spoke with the European Central Bank today about GDP. They're expecting GDP to fall and for that to cause inflation to come down. Obviously, that's not a good thing in the macro for GDP to come down, right? When GDP is negative, that's a sign of a recession. Interestingly enough, we're going to look at Google Trends here because look at the searches of recession. Joshua Earp actually is one of the top SEO experts in the world, doing SEO for major companies like Dell and billionaires and many other people. And so he understands Google Trends. It's a sentiment indicator, and it truly can give you the idea of what the majority of people are thinking because they're on Google searching things, and you're able to just kind of get a glimpse of how people are feeling. And you can see Google is saying recession is becoming extremely popular with search trends. And so there's a lot to talk about today, snipers. And then we're going to go in and look at Bitcoin against some of the top assets in the world. Look at this. Visa is worth more than Bitcoin right now. For a forward-looking investor, is that something that you believe? Who knows? Joshua, what do you think about the immediate short term? And then we'll answer some questions with the live audience because you're the one that said, I'm taking this long position at 20,000. And because of that, I stayed up until 3 a.m. last night, Eastern Standard Time, for the Asian market open. As I saw Bitcoin coming below 20,000, I texted you. I remember at 2:22 a.m., I entered into my long position. And then for the Discord, I sent out the position when it even came a little bit lower at 3 a.m. because I knew there was going to be a better entry there. And so we're in a long position right now. How confident are you with this long position, first and foremost? Your mic is not working. There you go.
I'm very, very confident in this long position. And, I just basically made sure that I held on to it because, there comes a time when you enter a position and you kind of start to double guess yourself or, double check yourself, et cetera, et cetera. And this was one of those times where I just knew pretty much what was going to happen. And that's the only time you want to enter a trade, guys. Is when you know it's not gambling. There's so many people that associate this with gambling. It really is, like, if your analysis is on point, you're going to win a majority of the time. And I can share my screen if you'd like real quick to go over a few things.
Absolutely. Go ahead.
Unless you want to cover a few things. So I think you have some great stuff too.
You can go first.
Okay, I'll just go first. We can go back and forth 3 or 4 times. Okay, right? As long as we give the people the great information that they want and deserve, right? By tuning into the channel. So let me share my screen and we'll make that happen. So basically right here, I have it zoomed out. Now this is something I didn't notice before, okay? Because remember we had the imaginary line, if you call it, from this top to this top. But ever since we started creating this formation and this pattern, I went ahead and I drew this descending triangle and I extended this line to where these two touch now instead of these two. And what that gave us, and what I noticed, what that gave us is a very similar setup and even similar size of descending triangle that we were previously at around the 30,000 or so range. And so what happened? So in order to understand what the price is going to do at this critical level, it would make sense to understand and look back at what the price has done at the previous support level, because history always repeats itself. And if it doesn't, then it at least rhymes. And so essentially, here's the thing. What happened on this descending triangle? We had this initial dump, the Luna dump, and we just kind of ignored that because it quickly found support. And look at all these touches on the 4 hour. Each one of these candles are 4 hours. Look how many times it touched, the whole pattern. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's ridiculous, right? This is just an obvious, not just descending triangle, but also there was a channel here as well for quite some time. I just erased the line. So, how many touches does it take for a pattern to become valid? The answer is at least 5 is what you're looking for. Not that it can't be before that, but essentially that's what we're looking at. So what I did is I drew this descending triangle, and I'm just using comparative analysis is what it's called. Predictive comparative analysis, where I'm looking back at what happened here, what happened here. Well, every time it hit the support level, there might have been a few times where it wicked slightly below, but until we had that huge dump, this support level was holding very, very well for about 1, 2, 3, 4, arguably 5 or so touches on the support level. Well, you got to go back to where we are right now. We have our equivalent of the Luna dump, right? But this is obviously just another anomaly. Now, also at the same time, we're quickly finding support just like we did back here. And so we've touched it support, arguably once here even, but if you're not counting that, so that would be 1, 2, 3, this would be the 4th time. Okay, so the 4th time I think is safer, because as Naeem, has taught you guys, and as he's taught me as well, is that if you knock on the door enough times, eventually you're going to get through. So that's why I feel confident in this long position. And I'm glad I do, because I'm up very significantly right now and using a little bit higher leverage than I usually use. I usually don't go over I usually start around 5x, 3 or 5x, especially if it's shorts, but I'm more of a bull myself. And then, as the trade starts going my way, and then there's something that happened on a certain type of candlestick that I want to show you guys as well, that made me kind of go all in and add to my position once I saw basically more confirmation. But essentially, that's it. I mean, look at this descending triangle. Look how many times it touched before a major breakout. We have the opportunity right here to go long at 20,000. And even though I'm going to sell most of my position around this weekly open right here, I'm going to let 25% or so ride, because I believe we could go all the way back up to 24,000. And but I'm just going to set my stop loss, which is this red dotted line right now. It's at currently 19,500 roughly. And because if it hits that, then that indicates what's known as a trend reversal. But we have a huge opportunity to make a lot of profit here, by selling 75% of our position at the weekly open, and then just kind of riding it to see what happens from there with a stop loss at break even, or even a trailing or manual trailing stop loss. Now, that's what I wanted to cover. I mean, you can clearly see room to the upside here. If you look at this descending triangle, you can see we just bottomed right here, a local bottom, not absolute bottom, but maybe, hopefully it is, right? Hopefully it is, but it's not guaranteed. And then you can see there's plenty of room to the upside. Now, there's one last thing I wanted to cover too that is very interesting, because I told Naeem, I said, now's not the last time to go all in, but it's going to be one of the best times to go all in once you see what I'm about to show you play out. Okay, now this is specifically on the 4 hour. Okay, and I have this little red line of resistance there. So as soon as we break above the red line, and I had this line drawn, back whenever we were talking about the double top. If you guys remember, I had this line drawn for several days before this price action was even here. And what happened? We came and retested it pretty much, all the way down. I mean, I originally had it a little bit off because I wasn't counting the wicks, but you can see it's respected it. So the moment we get above this red line, that's when we're in a true trend reversal. But I believe we could be at the beginning of one, because we have a daily open coming soon. But this is what did it for me. Now, what I did is I switched to Heiken Ashi candles. Okay. Now, what Heiken Ashi is created by the same Japanese ancestral bloodline that created regular Japanese candles. So this is created by the same family. that created regular candles, and all Heiken Ashi is, and I just look at both. Okay, so it's just something good to add to your repertoire. But essentially, what it does is it takes the average. With Heiken Ashi, it's very easier to see uptrends and downtrends because of the fact that, it basically takes the average of the last candle and factors that into the existing candle. So instead of a bunch of red and green, red and green, red and green in an uptrend or downtrend, which is very bad on the eyes, it's a lot easier to see what's going on if you switch to Heiken Ashi. And so what I saw is when I entered the trade, we were in the red on the Heiken Ashi. But the moment I saw a green 4-hourly candle, once again, you want to use the 4-hour for the market structure. Those are the three most important things when you guys are trading, as Naeem has taught me. Number one is price action number one is market structure, right? Number two is price action / volume. Number three is overall trend. So with trading, we're rewarded at the inflection points. And so I knew that 20,000 was a major inflection point. And it's not that I knew that we were going to get a bounce. I was just very confident in it. And I knew that if we did below that, then it's definitely not good. So that's why my stop loss is right here, because if it comes down and hits my stop loss, then that would indicate a trend reversal, unless it's a scam wick, which, you guys, when you're trading, you win some, you lose some. You just got to make sure you win more than you lose. And you got to have proper risk management, But the moment that I saw, every time we came down to hit 20,000 and printed a 4-hour green Heiken Ashi candle, we've always had a big bounce. I mean, look, we came down here, green Heiken Ashi, look, we pumped all the way up here. We had this anomaly in the data, but as soon as we, basically came and retested it, and as soon as we had a 4-hourly closed green, we came all the way up here. Same thing here, we hit 20,000 again, but the very moment that we had the 4-hour green candle, it signifies a trend reversal. So when you're using Heiken Ashi, it can help you to identify these trend reversals. So I knew as soon as we saw that this green candle printing on the 20,000 or roughly 20,000 level, that's whenever I basically went all in my position and then took my stop loss and moved it up here. And now we're just going to play it out and see how it goes. But I'm very confident we're going to definitely come up to, for some reason it's saying the daily open, but the weekly is all up here. But that's because Heiken Ashi makes it different. So if I switch to regular candles, you'll see it's actually quite the opposite. So it's the daily's right there. So yeah, so just be aware that your indicators and things like that might be a little different when you're doing Heiken Ashi, but I'm very confident we're going to be pumping at least to the weekly open or close to it. And that's it. I'm just holding my position. I'm staying strong. Yes, of course, with trading, you can always lose, but essentially, we're not risking very much right here on this trade with this type of stop loss where it's at. And then we have a lot of upside, potentially all the way to 24,000 in the short term, but at least somewhere around the weekly open. So that's what I wanted to cover. And then also last thing too is the 4-hour RSI. If we just expand this, you can see that we've started to bottom towards the bottom oscillator band here near it, and we're starting to get a reversal. And so what I'm thinking is, I'm going to keep an eye on this 4-hour RSI, and essentially I'm going to probably be exiting my position somewhere right around, the 56 or 60 mark, somewhere around there, because that's what's common to see. So that's what I wanted to cover. And then I'll hand it back over to you.
I do believe that descending triangle is oddly similar. If you don't mind, Josh, if you can show them that, if you want to even full screen, show them that other descending triangle. These are fractals, right? So sometimes what you'll find is algorithms will trade in fractal patterns, which means that they just pretty much are programmed to create the same type of market structure. And I find this descending triangle very oddly similar to that one that you and I actually traded, and we got stopped out of that one because we went short. It was a descending triangle, right? And a bear trend, a descending triangle was a continuation pattern. We were following the rules, and then we got stopped out when it broke that resistance. But if you can show them that other descending triangle.
I'm trying to, but my internet's being
it was slow. Oddly, it was oddly similar to the one that we're seeing now.
Okay, no, it's, if you want. Unless you're showing.
Well, it's funny because, you mentioned the Luna dump, and that was the only time that we came below the descending triangle support. And then if you look at the one that's currently being formed, the only time we came below that descending triangle support was when the Canadian Purpose Spot Bitcoin ETF sold 24,000 Bitcoin. So both of those things were odd scenarios that occurred that broke the descending triangle, could we argue that maybe the algos that and institutions and bad actors that are trying to liquidate some of these institutions are using the same market structure and creating these fractals? I mean, it certainly is a case to make. All I know is my long position that I entered here at 19,930 is currently 10% in profits at 8x leverage. Thanks to you, Josh. We took that at Asian market open. And so there are some things I want to talk about, snipers, for those on the live chat, that we will have a discussion about. And I'm going to clean up my chart here, but I do want to quickly, for those that aren't going to watch the whole live stream and watch the replay, talk about revolving parts in the market, because Jerome Powell spoke today about GDP, and pretty much a summary of what he said is, you know, we want inflation to come down, right? The Feds have two jobs, and this has been their job since the beginning of time, right? Number one is to control inflation, and controlling inflation is important because we cannot go past 2 to 3% inflation on a year-over-year basis, or else you start to experience hyperinflation, right? And a lot of people will have many different definitions of hyperinflation, but basically Jerome Powell said GDP may come down, may even go negative. I don't think he mentioned going negative, because you're never going to want to mention that as the head of the Federal Reserve, but he said GDP might be coming down, but that is probably going to help with inflation, right? So it's interesting to hear that. And the European Central Bank also mentioned that the transitory terms that they were using initially is probably now turning into permanent. And they verbatim said that we may never see inflation go back to pre-COVID levels ever again. And when I heard that, to me, what I heard was Bitcoin may never go back to pre-COVID levels ever again. And so that was the significance of the meeting with Jerome Powell. But I would say the markets haven't really reacted too negatively towards the news. You know, the S&P 500 was quite neutral today. The NASDAQ actually did close slightly in the green. And Bitcoin obviously didn't break its 2018 all-time high. And it was almost a no-brainer for us to enter this position that we took last night at 19,930, because number one, there's a saying in the market where you want to buy the hype and sell the news. So everyone knew Jerome Powell was speaking at 9 a.m. Eastern Standard Time. Why did Bitcoin decide to break 20,000 during the Asian market open at 3 a.m. last night? To me, it was the Asian markets getting the opportunity to go long on Bitcoin before the meeting, buying the hype. And so we took that long position. And as Jerome Powell came out to speak, we were just consolidating. And so far, we've only really seen upside. Now, that doesn't mean we're not going to get the rug pulled and come down, but I'm really just asking for the weekly open right now for this long position here at 21,000. To me, that's going to be a very handsome profit here, about 5.55% exactly from the entry that we took here at 19,930, literally to 21,000. 5.55%. What a lucky number, right? So that's all we're asking for. And something that's interesting is Josh and I have been saying this, and we talked about this on our first live stream. What would we do if this was March of 2020 again? Because this surely feels like March of 2020 again. Looking at some of these charts, I talked about this as well, that I had deja vu when I was on my phone. I wasn't behind my computer screen looking at Bitcoin against the S&P 500 on the weekly chart and seeing it below the 200-week moving average. I remember in March of 2020 when Bitcoin came down to $5,000 and it was below the 200-week moving average. And I was just sitting there looking at it like, is this thing dead? Is it going to just continue to dump? Is this going to $1,000 US? What's going on here? And I had deja vu looking at Bitcoin right now below 20,000 with the Bitcoin to SPY chart below the 200-week moving average. Everyone's like, that's it. Bitcoin's dead. 13,000 is guaranteed. 16,000 for sure. We might even come down to 5,000. I'm like, this is deja vu, right? Because back in 2020, nobody expected Bitcoin to come down to $5,000. And it was similar to where Bitcoin was just sitting at 7,000. People thought that that could have been the bottom, right? Because everyone was expecting the halving to come. And it was almost like the equivalent of Bitcoin bottoming out for a little bit around the $30,000 level, where everyone thought that was the bottom. It couldn't go below 30, and then it came below 30, came down to 20,000, even below 20,000 for a bottom around 17.5, and now it gives me deja vu of March of 2020. And it's funny because we like to back everything that we state on our channel here on the Snipers channel, and it's not just deja vu that I'm getting. Look at the Google trends of people searching recession. It's back to the same levels of March of 2020. So that's probably why I'm getting deja vu, right? So you can see the search levels are coming back towards the same time when Bitcoin bottomed out in March of 2020. So I think that is very interesting. You know, I mean, you have to think about who's actually searching recession. It's probably not the older crowd, right? The senior. I mean, most people that have been through a recession understand what a recession is. This is probably, I would consider, the millennials or even younger than that searching recession, maybe from hearing their parents talk about recession. For, you know, whoever's living with their parents, listening to their mom and dad saying, oh man, it's such a hard time, we might be entering into a recession. The kid might be like 14 years old, 12 years old, maybe 18 years old. I mean, nowadays kids are 24-year-old living with their parents still. And they might say, what the heck is a recession? I've never heard that word before. They go on Google, they search recession. So we have to assume the ones searching recession right now are millennials, right? Because, I mean, I hope if you're 32, you know what a recession is, right? You shouldn't be searching up the definition of recession. So if we're seeing the millennials come up and search recession right now, I think that's something to consider. So, you know, what Josh and I are saying that is if this is truly the bottom or close to the bottom, and this was March of 2020 all over again, how do you make money off of that? Well, if this was March of 2020 again, what I would be doing is taking long positions on Bitcoin. You don't even have to have that much capital. That's the beauty of this market. There's no $25,000 minimum trading requirement to day trade with leverage, right? Never go too far with leverage. But the point is, $100 on 10x leverage allows you to leverage and trade as if you have $1,000 in your account, right? So it's an opportunity right now that I think Josh and I want to capitalize on to start taking long positions, because even if you watch CryptoFace, one of Josh's favorite YouTubers, and I love CryptoFace, you know, he's one of the most blunt, straightforward YouTubers out there. And he had a blood diamond flash on one of his indicators when Bitcoin was like right around 34,000. And he said verbatim, this is the most bearish thing I've ever seen in my life. I've never seen a weekly chart on my indicator show a blood diamond. And it was like right around here that happened. And when that happened, you have to assume all the other algos also started to go short. And so the short has already played out, right? It's like the big short, right? Short the Dow. Remember that, Josh? It's like the shorts have already played out.
Too. Like you said, we called the double top before it was even a double top.
Yeah, and Josh and I aren't saying that we're not going to see lower prices. There's a chance we come down to fill the CME gap at 18,440. There's also a chance that we potentially go down to that long-term support level that Josh has shown on his chart, around 17,000. You know, those are things that are on the table, but the point is, if this is March of 2020 again, I think that there's a huge opportunity here to begin taking long positions, not just entering in spot positions and dollar cost averaging. You know, we all have heard of that, but this is the time to be in the markets, trading the markets when volume on perpetual contracts are at all-time lows. I read The Intelligent Investor once, and there was a quote in the book that said, the best traders trade when things are quiet. When there's not many people coming into the markets making noise, the best trades are made when things are quiet. Things are just calm, right? And so things are calm right now, right? It's like, you ever seen that meme of the person that's digging and digging and digging and they don't find the gold or diamonds, and then they, right before they get to the diamonds, they just say, you know what, this ain't working, I'm giving up, and they walk away. Well, I think a lot of people have decided to just walk away when right now is probably the most opportune time to be in the markets, trading the markets, understanding the markets, learning about the markets, understanding how to trade the markets. And of course, dollar cost averaging over the long term, we've always talked about this. You should always have a long-term portfolio where you hold and never sell, put it on a hard wallet and forget about it. And then there should also be a portfolio where you can make swing trades, where you're holding for a couple of weeks, maybe a couple of months, but you are taking profits on those positions. And then you can have a portfolio set aside. Josh and I like to say it, put 5,000 for us. We like to do $5,000, put it in a Bybit account and go 20x on a trade. And because if you are successful on that trade, you can turn that 5,000 to 10,000, take the other 5 out, and then do it again, right? Take 5,000, then risk liquidation on every trade, right? I mean, I'm not saying that for you it might be $100, might be $500, might be $1,000, might be $50, right? The point is, have a day trading portfolio, a swing trading portfolio, and a long-term portfolio. But anyways, check this out. Isn't this interesting, guys? I want to hear your thoughts in the live chat, but I'm looking at the market cap of Bitcoin here at $386 billion. I was on the phone with Jason Derulo. I think it's fine for me to mention this because we never signed an NDA. So I met him in Dubai with a great friend of mine named Marcel, and he knew I was in crypto. He'd watched some of my videos, and we began exchanging info with each other, and going on the phone because he's actually got a pretty substantial crypto portfolio. And I remember Jason Derulo, and this was a few months into, I'd say, December, January, asked me a question. And he was like, you think I should be going all in right now? You think Bitcoin's going to just go? It was at $65,000 at the time. It was forming that double top, that higher high. And I'm like, Jason, let's look at the total value of the cryptocurrency market. And I said this on the phone. It was an hour phone call with him. I was like, look at the total value of the cryptocurrency market right now. And it's worth $2 trillion, right? The total value of the cryptocurrency market. But what is the use case so far? What actual use cases are there? I was like, you just need to ask yourself a question, Jason. Do you believe the cryptocurrency market is worth $2 trillion right now? And I was like, that's the equivalent of Apple, right? Think about how many people have an iPhone. Think about how many people use Apple. Do you believe the cryptocurrency market at its current form, is worth $2 trillion? Is it worth just as much as Apple in its current form? I understand 12 years from now, 20 years from now, crypto's the future. If we start to colonize Mars, we need to have cryptocurrencies, right? I understand that, but right now, in the present moment, because all you have, Josh, you taught me this, is the present moment. This has helped me through so many dark times, by the way, Josh. Thank you so much for this advice. You taught me this. You said all you have now. Could you say the quote, actually? Because you are like photographic memory, man. That quote is so powerful.
Yeah. So all we have is the present moment. And when you arrive to the future, you will discover that the future is an illusion and that it is yet again just another present moment. In fact, life is a series of present moments, and the present is a gift. That's why they call it the present.
And that quote changed my life. I said, Jason, do you believe in the present moment the cryptocurrency market is worth $2 trillion? And he says, I don't know. I said, well, I'll tell you what, I don't think it's worth $2 trillion. Why? Because what's the best use case that we have for Ethereum right now? NFTs? I understand decentralized finance is there, but with only 100 billion that was locked up at the time, I was like, is this really worth $2 trillion? How many people are actually using DeFi? Is it as many people that have iPhones? Absolutely not. I was like, this is a potential peak. We're either going to form a lower high, a double top, or a higher high. I was like, that's what I believe. And I've said that in my videos. I've said that many times in the past. That's how we predicted the top. We said this is going to either just go shoot to a higher high. For those in the live chat, if you remember me saying this before Bitcoin topped at 69,000, do you guys remember when I said we're possibly going to be forming a higher high here before this could be the top? And I said that to Jason, and I was like, man, is this worth this much? So, sometimes it's what I'm trying to get to is it's worth looking at a chart like this and seeing what the market cap of some of these assets are, because right now Bitcoin is worth less than Facebook. Bitcoin is worth less than Berkshire Hathaway. Bitcoin's worth less than Tesla, but Bitcoin is worth more than ExxonMobil. Let's see, it's worth more than some of these Walmart. Bitcoin's worth more than Walmart right now. So Bitcoin's at a $386 billion market cap. Let's look at Ethereum though. People say Ethereum is the future. How far back? Oh man, look at Ethereum, 91 now. Holy smokes. So Ethereum is only at $134 billion, right? So what do you think about this, Josh? Do you think Ethereum is worth more than Intel? Remember when we were with Charles Hoskinson and I was like in November and I was like, I have a huge position in Intel, and he laughed at me because it wasn't Cardano at like 15 cents at the time or something. And he laughed at me. He's like, what if you put all that in Cardano? And I should have, because then it shot up to $3.
Yeah.
Do you
Yeah, I
think?
mean that's the whole hardware versus software too analogy. So, I think essentially Ethereum has the potential to do very well. You know, from a technology standpoint. Um,
It has the potential, but in its current form, I think that it's maybe
yeah, exactly.
close.
That's when the price is going to go up.
I think it's close to its intrinsic value, and so anyways, that's an interesting one. So let's talk technicals. What do you think about this Adam and Eve pattern, Josh? Because I know we're talking about
Yeah.
20,000 holding. You and I are in
So
a long position right now. What do you think about this Adam and Eve pattern? Because this is oddly similar. This pattern right here, this Adam
it
and Eve
is.
pattern, is oddly
It
similar
is.
to exactly what's happening right now to the price
Yeah.
here.
So what I would say is, it's nothing to worry about because, we haven't, the Adam and Eve really plays out when you go past the support target and then retest it as resistance and then continue to the downside. That's not what's happening right now. We're getting support at 20,000 and we're bouncing from 20,000 up towards hopefully, the weekly open. And so although it does resemble the Adam and Eve pattern, I don't think it's anything to worry about because it's also called the double bottom. So we're at a double bottom right now. And I believe that we could be forming a possible head and shoulders. And then that once we form that possible head and shoulders, so that's the Adam and Eve scenario you're mapping out. I don't
I'm
think that's
thinking
gonna
if
happen.
it plays out, what's gonna happen? I
Yeah,
agree. I
I think
think
we're gonna do a head and shoulders. I think the left is the shoulder, the head you just drew, and then there's another right shoulder that's gonna form, because of our long position. And then I think after that head and shoulders, then we could possibly break down past 20,000, fill that CME gap at 18,005 or wherever that's at. I think it's somewhere around there. So that's what I think is going to happen. I think the descending triangle we're in right now, I think it's got a little bit more. It's got one last pump in it. I would say.
yeah,
That's why
look.
I'm putting my money right now. I'm in profit right now. If I were to trade based off that Adam and Eve strategy, I wouldn't be in profit right now.
Yeah, I think based on what I'm looking at is if we come back down to 19,798 right now, that we will potentially see the CME gap get filled. I think at this point, especially because we already saw the Jerome Powell meeting, we have a new monthly open in less than 24 hours, which interestingly enough, about this new monthly open, I want you
It's a
guys to
double
look.
bottom.
Sorry?
Oh, I was just saying, yeah, that looks like a double bottom when you have it on like that. What were you saying then?
Well, interestingly enough, about this new monthly open, what I find very interesting is this total cryptocurrency market cap chart, right? We were talking about market cap. Oh, look at that. 100-month moving average just popped up for
Not the
the first
hundred
time.
month moving average. Okay, so that's the moving average that ties in exactly with the yellow line.
My gosh. Well, that's down here at a
Like the yellow
$400
line on
billion
the right.
market cap. You know what's funny? The dot-com bubble, when the Super Bowl ad came out, the dot-com bubble was very similar. It was like there was during the Super Bowl, all like pets.com had a Super Bowl ad, and during that time the whole dot-com bubble was around $2 trillion before it peaked out, and then it came down, and then it took over a decade for it to recover. And what's funny is we topped out, or it was very similar. I think it was right close to 3 trillion. It was like very similar to the crypto market cap so far. So I've heard a bearish thesis that if this is like the dot-com bubble, it might be a while till we get back to these highs. But I don't believe that's the case, because if you listen to Kathy Woods, with technology, it grows exponentially, right? And it follows the, it's
Look at that. Look at that head and shoulders pattern on the monthly right there. That's crazy. Left shoulder, head, right shoulder. Wow.
Yeah, well, that, interesting. If we were to just take the base of I know what you're talking about. We'll look at that actually. But real quick, what's interesting is so far we have this monthly candle closing, and it tested the 2018 previous resistance all-time high on the dot. Literally, like the high was $761 billion, and the low here was 762 billion. So to me, that says that we're not going to dump into the monthly candle close, that we're most likely going to pump, at least to reclaim some of this candle body here. I think the next monthly candle, especially because we always talk about this, Josh, the first touch, the first test is usually the best for you to enter into a position and to make a inflection, or it's usually an inflection point to make a big decision. You know, and I say that because, you know, the traders that take that first test of, let's say, a major support or a major resistance, when you take that first test trade, you're the one risking the most, but you're the one that's usually rewarded the most because you're going in on that first test. Now, of course, you should wait for confirmation on the smaller time frames, though. So in the macro, this is the first test of the 2018 previous all-time high for the total market cap, and we didn't break it. So that's sort of bullish. If we broke past it, would have been very bearish, but we tested literally within $1 billion of the previous market cap high, and what is previous resistance usually turns into support. That's why I think some altcoins are up, 50% from their current lows. And what you mentioned just now, Josh, is this head and shoulder pattern, which I will actually put on the table here because there is this head and shoulder pattern. We talked about this a while ago. I'm so glad you brought this back up. So why don't we actually look at this head and shoulder pattern? So here's the head and shoulder pattern to me. I believe that this right here could be considered the left shoulder, and that matter of fact, I'll draw it like this. So we want TradingView to validate the pattern as well. So I'll draw this as the left shoulder with the head here and the neckline right here. I like the neckline right here. I'll tell you why. If this was the right shoulder, you can see TradingView shadowed in all of the triangles, which means that it is validating it for us. The reason I like this being the right shoulder is because notice how with a head and shoulder pattern, what would typically happen is when you break down, you will come back up to test the neckline. And this is the inflection point where if you're going to go bullish and invalidate the head and shoulder, you break through the neckline. But what I like about drawing the head and shoulder like this is that we break below it and then we come to test it, rejected, test it, rejected, test it, rejected. And so it validated this as the head and shoulder rejection. And so if this we can assume is the head and shoulder that we're talking about, then we'll just take the top of it to the base of it to get the target. And let's see if we hit the target of this head and shoulder pattern. If we were to just take down here, we're talking a target here of just below 17,204, which is the major level. But you can look at it in different ways, right? Maybe we can take it all the way up here from that first or that last rejection point. You can see here, it almost looks like we found the target. And so if that's the head and shoulder, then it's already played out. Now it's time to go long, right? I mean, if we, it's just subjective at this point. You can take it from this rejection point, this rejection point. I mean, the point is, if they want to bottom it out here, they could, and it will make sense to bottom it out here. If, let's say, aliens invade Earth and there's another dump, maybe they'll take it down a little bit further, but that'll be the least of our worries. At that point, we want to have beans and bullets, right? That's what we want to invest in.
Yeah.
So, I mean, I think it's justified there to make that a top. So let's answer some questions from the live audience. Sylvan says, that way Bitcoin stays sort of stable. Thanks for addressing the Adam and Eve pattern, by the way. Sylvan says, for me, Bitcoin already has use case right now, is distributing money from all over the world. Yeah, what's interesting is after the pandemic, Bitcoin prior to the pandemic, its average transaction size was less than 100,000. Now, if you look at the average transaction size for any Bitcoin transaction, it's over $100,000, which means that people that are only sending around 6 figures, that's the average user base right now. That's obviously institutions and companies that are using it cross-border most likely. Obviously, if there's money laundering, that comes with anything because even the US dollar is used for money laundering. Actually, a lot more than Bitcoin is used for money laundering. So you can't put that on the table. But yeah, no, you're right. I mean, for the average transaction cost, after 2020, we saw a very big shift into institutions using Bitcoin more than anyone else, because I think before that it was close to 100. I think it was like 70,000 or 50,000 was the average transaction, transfer. But right now with Bitcoin, it's around 100,000. That's also what makes it valuable. If Europe goes into a heavy recession, maybe Asia will put more money in. Look at the volume slowly increasing, bullish. Let's see volume on the 5-minute chart. Let's see 15-minute chart. I don't see crazy volume here. Where is the VPVR? Where's the main, like, so all right, let's look at where most people have entered positions inside of this consolidation. We are below that. So most people, so right now we're seeing some pain for most people that entered positions. This white line here is the average price inside of this consolidation of the price action that's within the chart. You know, like if we go up here and we look at price action, including this consolidation, you'll see there's more volume actually up here. But if we were to just factor in this recent drop, most of the volume came in at where exactly the weekly open is sitting, right? That's why I love the daily, monthly, weekly open indicator, because it's one of the only indicators that is a fact. It's not subjective. It's not like, oh, well, is it oversold or over? No, it's just you have a weekly open and there's a number to it, and that's a fact, and it doesn't change. And so the weekly open at 21,000 is the average cost that people have bought this dip in. So that's interesting. So we're below that right now. So that's where you would potentially have a nice long position, where if it gets back above that volume, then that will hold as support, and you can set that stop loss to break even. I haven't even set my long position stop loss to break even because Josh and I, you know, we're pretty confident in this. I mean, if we do come back down to 19,798, now we are playing with fire, and so far on the revolving parts, it doesn't look like that's the case. Let's see here. Josh, if you want, you can answer some of these questions.
Yeah, I think we're going to keep, we're just going to keep forming higher lows is what I believe. And if we come back down, to our entry at 19,930, then we have the option to sell, pay a little bit in fees, of course. That's going to be nothing compared to the potential downside that we can see. That's the thing. You don't want to let your trade get too far in the red, and you don't want to risk too much on any one individual trade, because the market's not going anywhere. And you don't, like I said, you don't want to risk too much of your account. There should never be one trade you're taking more risk on than any other trade, essentially. Because if you're going to plan to be trading these setups, you got to make sure that you're managing the risk. It's not always about making more money. It's about better risk management.
Yeah, and Peep Einstein says that Adam and Eve pattern is nonsense. Sylvan Dagavos asks, is Adam and Eve pattern still valid? I would say that's a great question. I would say it's still valid until we can get above, and this is obviously very subjective, but I would say that our first checkpoint for the bulls right now is the previous weekly open. 20,574. If we can get above that, then we have a high chance of invalidating the Adam and Eve pattern. I think getting above the weekly open is even a stronger confirmation, obviously, at 21,000. But I would still say that being between the previous weekly open and the 2018 previous all-time high, I think there's still a chance that the Adam and Eve pattern could play out, right? So, the good thing about going long here, though, is that even if it does play out, what you could do is when it breaks and it comes back up for that retest, because you can see here, usually, it'll come back up for that retest, and, you can get out of that long position. If you've already taken profits with the current gains, then you'll actually come out in a profit. So I would say it's still valid, and the first sign of it becoming invalid is 20,574. I mean, is it justified right now for that to happen with the DXY pushing up 0.59% so far? I mean, I would say that DXY is pushing up, and we can't call it bearish yet. I mean, it's in such a strong macro bullish trend that it's quite tough there. One thing that happened today, and I talked about this happening yesterday, is Ethereum sold off a lot more than Bitcoin. Actually continued to form lows while Bitcoin was holding up. And that was very clear to us because we knew we were breaking into this new range here. When 1165 broke, it opened up the door to 909. And so I think that is very important. So one thing I am monitoring is the Ethereum to Bitcoin chart holding above 53,500 Satoshis for the higher low. Because what you'd want to see if this was bullish is a break, and it certainly could be bullish. Why? Because look at this weekly candle volume. We got more buyers than we've ever seen move their Bitcoin into Ethereum since Ethereum since January 4th of 2021, when Ethereum was pretty much sitting at, I think, $700. That was the only time we saw more volume of people moving their Bitcoin into Ethereum than what we saw here with this candle, this weekly candle. mean, that could be in anticipation of the Ethereum merge, whatever it might be. But I would say that there's certainly a federal case to make that we could have potentially bottomed out here in the immediate short term. And that confirmation would actually be very positive to assume Bitcoin has bottomed out as well, because if Ethereum to Bitcoin starts to move up, that's showing confidence back in the total market cap, which didn't break its 2018 previous all-time high and tested it for the first time as a major support. And so I would say for the higher low to form right now at 53,500 Satoshis, this would be the most bullish thing that we could see here with the Ethereum to Bitcoin chart, holding 53,500 Satoshis and continuing to show strength on the daily and weekly time frame. That's what I'm monitoring there. And let's see, DJ Short says, I flipped back to short. Remember, Josh, we were talking about trading is like roulette. You only got two options. You go long or you go short. Would you take a short right now? Could you justify a short? You can even go on your chart if you want. Could you justify taking a short position right now? Like if you and I were massive bears, like would this be a time to take a short?
Yeah, so the only time I would take a short is if we drop past 20,000, test it as resistance, and get, 1, maybe 2 hourly candle confirmations of that, and then we see volume to the downside, then yeah, I would open up a short. But right now, we're not able to break below 20,000. 20,000 is holding very strong right now, and we're seeing volume to the upside. Sure, we're seeing a little bit of a dip from that initial volume that just happened, but I'm very confident in this position. You're not going to always win every single trade, right? In order for someone to be right, someone else has to be wrong. And so you just have to realize that that's where the stop loss comes in. And you just don't want to risk too much of your account on any single trade. So that's where, you may get stopped out 3 or 4 times, but as long as you hit it on the 5th time, you're good, right? So that's the mentality you gotta think.
And by the way, everyone, Joshua Earp's YouTube channel's link is in the description below. We're trying to get him to 1,000 subscribers, and he may even start doing his own live streams outside of our channel once he reaches 1,000 subscribers. So make sure to subscribe to his channel. We are seeing some sell pressure here. Let's look at what's happening. We're seeing less sell pressure, actually an equal amount of sell pressure to what brought us above the daily open. So we could assume it's the same institution right now that's bringing the price back down below the daily open. Because notice how the volume is literally the exact same. So what you'll see is sometimes institutions want to test waters, see how bullish people really could get. They'll put the volume in, see if more volume will come in. And if it doesn't come in, they'll go and they'll just exit their position. That seems like what's happening right now. They're exiting their position that brought us above the daily open. So that's interesting. And then we did get a lot more sellers behind that volume. So kind of a bearish.
I'm not afraid. You're always going to have these mini dumps when you're in an upcycle. What I'm looking at is not any of that. What I'm looking at is higher lows, higher lows, higher lows, higher lows, And so right now we are making a higher low. 20,000 was the low. Now we're sitting at 20,200, and it's having trouble going below that. In fact, it's getting eaten up as we speak. So what I'm saying is, as long as we consistently make higher lows, I'm still going to be in the trade. Now, when we start making lower lows, then that's when I would think about exiting.
I like that, man. Let's see. Pulse Dent. What do you think about this? Josh says, TA is all fun and good, but let us zoom out. And Josh, you always say this: when in doubt, zoom out.
Well,
so we
that's
know
what
that.
I do. I zoom out on the TA.
He says, what macroeconomics of previous cycles were worse than this one? None. Therefore, why would we not do the average correction of 80 to 90%, which means a $10,000 to $12,000 Bitcoin? What's your thoughts on that?
Because markets are irrational, and the market does whatever it wants, right? So I just move with the market instead of trying to move against it. And so that's really my whole thing. What was the last part of that question?
Well, they said part 2, people are not putting money into companies that actually change our world and actually make money. Therefore, why would real money come into speculation? It won't.
Why would real money come into, sorry, you were breaking up a little bit.
Why would money come into pure speculation? I think it's hard to say Bitcoin is pure speculation, and I don't
And
care
not
what.
only that, but this is a critical level at 20,000 too. So it's like if we do dump from here, it ain't gonna be pretty. I can tell you that.
Yeah, and I'll also argue that nobody expected this to happen at this exact time frame. People were holding and hoping that 30,000 would hold, and it was clear that there were reasons fundamentally that Bitcoin needed to come down here, and that was to clear out some leverage. Initially, we saw the Luna dump, and then we saw Celsius, Three Arrows Capital, and Purpose Spot Bitcoin ETF dump. And so we got a lot of fear here. That brought in even more bad actors trying to liquidate other institutions. And I think psychologically, because I understand that we can talk about macroeconomic environments, blah, blah, blah. But the point is, before things start to reverse, you're not going to be aware of it. Just like in 2020, where people started to get fearful of the macroeconomic environment in March of 2020, little did they know Bitcoin was sitting at the most opportune level in history at a bottom, and eventually they found that out 6 months later. Same thing right now. Okay, I understand macroeconomic environment can't get worse than this. I mean, I think pandemic was pretty bad. I mean, like, remember that? We're locked in our homes and can't get out. Like, how much worse of an economy could you have when that's the case, right? So I think that, yes, there is fundamentals. It's 10%. Technicals are 10%. I like technicals because it's like the weather, right? It's black and white. There might be a 90% chance of rain today. There's a 20% chance of snow, right? It's something that is predictable, and it's not like fundamentals where you can just attach narrative after narrative after narrative. And here's something I know about the human race, that eventually optimism always does better than pessimism. But you never want to always be an optimist, and you never always want to be a pessimist. You want to be a realist, stay in the middle, right? Never be too extreme. But when there's so much pessimism, everyone's saying we're in a recession. You can clearly see that with Google Trends. Eventually, the human race will then move towards optimism, right? So, Josh, you've said this before.
Yeah.
What comes after every dark night?
It's day. You can't have yin without yang. You can't have sunshine without darkness. You can't have up without down.
And there's blood on the streets right now. That's very clear.
Yeah, and there's never been what you would call a double night. Every dark night always turns into day. When have you ever remembered it being a double night? At least, you haven't, at least not in the last 2,000 years of recorded history. So what I think's happening with the price right now is we're probably going to get a bounce off the volume weighted average price. And as long as we test...
Do you want to pull your chart out?
Yeah, I can do that. Actually, I think
you have a meeting coming up, right?
Yeah. So I'm going to have to pop here soon probably. But... and I already closed my chart out, but essentially just know the volume weighted average price is currently at 20,110. And so what I think is going to happen is we're going to come and test the volume weighted average price as support. And then as long as we're able to test it as support, then we're still considered bullish. Sorry, we got guys driving in Lamborghinis down the street. But anyway, so the whole thing is that's what I'm looking at is the volume weighted average price. And so as long as we're able to test that as support, and that would indicate a higher low as well, and that would be major confluence, and it'd still be above our 20,000 line. So that's what I'm looking for. I'm not going to let any small little dump, scare me out of my position. Kind of like what you said, Naeem. You're like, I'm not going to let the market fool me. And so that's basically what I'm doing. I'm holding strong. I'm risking the stop loss. Stop loss isn't too far down. It's at 19.5, I think. Yeah, so it's not like you're really risking much, especially if you're not using much leverage. I just used a little bit more leverage than usual just because I'm confident in this position. And I've waited for this moment, for several days. So now that I've waited that long, it's like, okay, well, I need to take advantage of it. So that's kind of that's why I'm at where I'm at right now. But yeah, I wouldn't let this small little dump scare you, because as long as we're still hovering over the VWAP, the volume weighted average price, then we're good. And right now we're getting a bounce on the VWAP, so look at that. What do you know? So that's what I wanted to let you guys know. And yeah, was there anything else, Ryan, you wanted to say? I guess we'll have an update on our position here maybe later tonight. It's going to take time, just so everybody's aware of. Like, that's the one thing Naeem also, made sure I was conscious of, not confident of, conscious of, is time. So when you're doing these trades, you want to factor in time as well. So I imagine.
Could I see your setup real quick?
Yeah, yeah, of course. But I would basically imagine that. Let me see. I got to go back to Zoom. But basically, I would imagine that I'll be in this trade for like a day, maybe 2 days, something like that. So this is the setup right here.
Holy smokes, bro! Look at all those charts. I love it.
Right now, like I said, I'm in a long position.
I love it.
Yeah, but essentially, guys, like, yeah. So we're testing the VWAP right here as support. So that would be this right here. I don't know if you guys can see it. Maybe not, because it's a little weird, but yeah, we're getting bought up on the 7-minute on the VWAP. So also got to have the whiteboard next to you as well. So that's pretty much what I'm monitoring, and I'm not going to let it psych me out. So.
Well, guys, remember to subscribe to Josh's YouTube channel. We want to get him to 1,000 subscribers, and smash the like button if you're watching this right now, because we're going to wrap up, and that helps the channel. I appreciate each and every one of you snipers tuning into the channel. Josh has a meeting. I also have some plans, and so I do have to go. Thank you all for tuning into the Snipers channel today. We appreciate each and every one of you guys that are on the live stream. And the more that you guys support this content, and the more of this content that we will put out. And with that, thank you guys. That's it for me. Do you have anything else to say, Josh?
I just want to say thanks to Mr. Naeem Al-Obeidi. If it weren't for him, I wouldn't even be here today. And I'm grateful for all the things that he's taught me, and allowing me to come on here and share some things with you guys. So it's always great when you have literally the best analyst in the world lets you come on and share some ideas. So I want to say thank you for that. And and thank you guys all for subscribing to the channel. I'm trying to get to 1,000 subscribers. So anything you can do, if I can get to at least 1,000 subscribers, I'll start pumping out some really good high quality content for you guys. And we got some live trading we're gonna do as well in the future. So gonna be a good time.
Awesome. Thank you guys all for tuning in. Thank you so much, Josh. It's always a pleasure to have you. You add so much value to the channel. And
thank you.
With that, that's it. Snipers, we'll see you guys next time. Snipers out.